Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, the FOMC meeting. The Federal Reserve will on Wednesday decide interest rates and also update its economic projections. This would be a very fortunate outcome. Traders are pricing in a rising risk that falling inflation will be accompanied by a recession. Expectations are for a 50 basis point hike in December, followed by a pause in rate hikes in the next one-to-one meetings. This is keeping the dollar under pressure, but leaves room for an upside surprise if projections are more hawkish. Number 2, US CPI data. This is released a day before the Fed meeting, so could cause more volatility than usual. Last week, the US dollar enjoyed a brief respite from the downtrend in place since it peaked in October. Strong payrolls and service sector data served to offset the slowdown in monthly inflation data, which has been weighing on the dollar for over a month. Expectations are for a modest uptick to 7.3% year-over-year core inflation, while the headline number is expected to hold steady at 7.7% year-over-year. Number 3, SMB rate decision. A more hawkish stance from the ECB as well as the Fed policy pivot has seen the Euro-Swissy currency pair rise since October, allowing some room for the Swiss National Bank to tighten policy without a stronger franc. Back in September, the SNB lifted Swiss rates out of negative territory for the first time since 2004 with a 75 basis point rate hike. The SNB tends to only change policy when it releases its economic outlook every quarter, so economists expect another hike in December to catch up with other developed central banks that hiked in the interim. Number 4, Bank of England rate decision. In the light of double-digit UK inflation, the Bank of England expects to lift interest rates to a peak of 4.75% next year from the current 3%, likely including another hike this Thursday. However, the central bank has simultaneously warned that the UK likely entered a recession in the third quarter this year. The pound has rallied with a weaker dollar, but the recession talk likely explains why sterling remains under pressure in other currency crosses. Number 5, the ECB rate decision. Another major central bank decision happens this week in Europe. The euro has surged 1,000 pips over the dollar in just over 2 months, recently topping 1.05. The ECB is expected to raise rates by 50 basis points this week, after back-to-back 75 basis point hikes. The smaller hike could weigh on the euro near term, but the bigger picture is that inflation in Europe is still rising, meaning rate hikes in Europe are likely to pause later than the US, putting upward pressure on the euro. You can of course click on the link in the description below to see the full economic calendar with the previous month's data and consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and remember to give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.